In the last video, I talked about Lam Research's earnings that they reported last week. And on the same day that Lam Research reported earnings, ASML also reported their earnings. So I want to talk about that in this video. And the video is going to be oriented in the same way. So I'm just going to give a very quick rundown of their earnings release, of the financials, and also a very quick summary of the earnings conference call. So first off, if you're not familiar with ASML, they're also a semiconductor equipment company. They're a bit different from Lam Research in that, here, let me show you. ASML actually produces EUV systems. So this right here. So this stands for electric ultraviolet lithography machines. So they produce, yeah, here it is, extreme ultraviolet lithography. They produce EUVs, extreme ultraviolet lithographies, and DUVs, which is deep ultraviolet lithography machines. So the distinction isn't really important, but what is important is that they are basically the only company that does this. So they have a near monopoly on this kind of thing. And this kind of equipment is very, very important for producing semiconductors. It's pretty much, well, it's necessary to produce semiconductors. So ASML pretty much have a monopoly on this kind of machine, and they're just a very important role player. They're Dutch, by the way. So that's why right here you can see their revenue, their EPS. So I have what it is in euros, and then I also have what it is in USD, or in dollars, right? So they actually reported before the bell on October 19th, and their previous close price was $3.98, and then their stock on the day rose over 6% to $424. And again, this is kind of similar to Lam Research. A lot of bad news was being priced in because, as you can see from their last earnings report to this earnings report, their stock fell by over 22%. And that, of course, as you can see here, that doesn't include the day of their last earnings report. So, oh yeah, and unlike Lam Research, they don't have this weird thing where their fiscal quarters are different from the calendar quarters. So their most recent report was for their fiscal third quarter 2022, which is not confusing. Thank God. And yeah, so for last quarter, after they reported earnings, their stock rose by over 3% for the day. And then from that time to the time before they reported earnings for this quarter, their stock decreased by 22%. And then after they reported earnings, their stock increased by more than 60%. So let's talk about why. So they reported, remember I said they're Dutch, they reported revenue of 5.98 billion euros for the quarter. No, sorry, that's analyst estimates. So analysts estimated that ASML would report revenues of 5.98 billion euros for the quarter. But ASML actually reported revenues of 5.778 billion euros for the quarter. So they actually missed analyst estimates by over 3%. And a really quick note here. So I have their revenue in euros and the revenue in USD. So you can see that actually in terms of euros, their revenue increased by over 10% from last year. So you can see last year here they had 5.24 billion euros of revenue, now 5.77 billion euros of revenue, an increase of over 10%. But during that time, right, we know, obviously, of course, the dollar has increased by a lot over the past year. So actually, in terms of US dollars, their revenue has actually decreased over the past year. That's how strong the increase of the dollar has been. So yeah, their revenue. So really, I mean, they're a European company. They're Dutch. We mainly care about their revenue in euros. So the revenue increased, right? They're still increasing their revenue. So great, and their revenue increased by 10%. their EPS was estimated to come in at 3.97 euros per share. It came in at 4.29 euros per share. So that's an increase, or they beat the EPS estimates by over 8%. And you can see it's kind of the similar situation as with revenue, right? Their EPS in terms of euros increased year over year, but in terms of dollars, it decreased year over year. So anyway, they missed revenue and they beat EPS. So what does that mean? That means that they beat the margin expectations. Their margins came in higher than expected, right? They missed on revenue, but they beat on their earnings. And then again, this is similar to what Lam Research does at the end of every quarter, or at basically every release. Every time they release, they have an earnings announcement. They estimate what their gross margin will be. I mean, ASML estimates what their gross margin will be for next quarter. And they beat. So last quarter, they estimated that their margins would come in at what? So they beat by 2.3%, right? So last quarter, they estimated 49.5% for third quarter, but their gross margin came in at 51.8%. So they beat their gross margin target, and this is an internal estimate, not analyst estimate, right? But then, right, the most important part is about the guidance. So there was a consensus for guidance. Analysts thought that, so before ASML's third quarter release, analysts estimated that ASML would guide to quarter four, let's see, 6.13 billion euros. And ASML actually guided 6.35 billion euros. So they beat guidance estimates. I'll do that later. So, 6.35 billion euros, and last fourth quarter, ASML only made about 5 billion euros. So here, let's bring this over. Well, that's not here. Give me a minute. So you can see that they're estimating, right, because we're talking about, this is their estimate for fourth quarter. So they estimate that the revenues will increase by 11.4%. And this is in euro terms. And let's see this here. What the hell is the problem here? Oh, that's not right. Okay. So anyway, but yeah, so they estimate that next quarter their revenue will increase by over 10%. And analysts were not expecting that. Analysts were only expecting ASML to guide to 6.13 billion euros for next year. So ASML revenue guidance came in over 3% above estimates. And also, so you can see right here, at the end of every quarter, what they do, they give revenue estimates for their full fiscal year. So right at the end of the fourth quarter last year and at the end of the first quarter this year, they estimated that their revenue would grow by 20% in 2022. But then in July, they came out and they said, okay, well, our revenue is only going to grow by 10% in 2022. Now they're bumping that back up 13%. You say that here. And, well, yeah, you may think it's kind of weird that right here, right, they decreased their full year revenue guidance, but their stock still increased by more than 3% on the day. Well, but look right here, right? I mean, their stock price, before they released this earnings announcement, their stock price decreased by over 20% from the last earnings announcement. So this is kind of common for stocks, right? Before the earnings announcement, investors price in what they think. I mean, investors know, if the company is going to report bad results, then investors kind of know that and they price that in accordingly. And a lot of times, or sometimes, the results aren't as bad as people fear, and the stock actually goes up. See, right? Like last quarter, their guidance for next quarter came in 20% below estimates, but the stock still went up. But yeah, this quarter, their guidance for next quarter came in 3% above estimates. And, this is the guidance for next quarter, just to clarify, right? And this is the guidance for the full year. But yeah, and their guidance for the full year, actually, they increased that guidance. So yeah, you can see their stock did very well upon that announcement. So here, I'll very quickly talk about the earnings conference call right here. I just highlighted the most important parts. This isn't that important. It's just basically saying net system sales, which is a big proportion of their sales. Like most of that is logic, and a smaller percentage is memory. It's not really important. But here. So, and this is similar to something I talked about in the Lamb research video when I was talking about deferred revenue, right? Deferred revenue, just to reiterate, is when a company has been paid for a product but has not delivered that product yet. So they can't, under accounting rules, they can't really classify that as actual revenue, which would be equity. So they classify that as deferred revenue. And so they're saying gross margin came in for this quarter, came in at 51.8%, which was above our guidance. Remember, right, 2.3% above their guidance, right? So yeah, you can see here, last quarter they got it at 49.5. They thought that this quarter's gross margin would come in at 49.5%, but it came in at 51.8%. And this is primarily due to the pull-in of revenue from both the release of deferred income on a factory option as well as additional upgrade business. So the release of deferred income. So they're basically saying that they're getting some deferred revenue, right? So the takeaway from that is that supply chains are getting a bit better. And the higher R&D guidance, so this is where they get their guidance, and I didn't write everything here. I only wrote their guidance for the full year, their full year revenue growth guidance, and then their revenue guidance for next quarter. But they also get guidance for R&D and OPEX, operating expense. And they say that the higher R&D guidance is primarily due to additional headcount and labor cost increases. Higher SG&A is mainly due to additional headcount and IT spending. So, right, additional headcount and labor cost increases. So that's just inflation right there, labor cost inflation. Then another important part that I wanted to talk about was this right here. So we do see some customers running at lower tool utilization levels and revising their CapEx plans for next year. And this is something that Lamb Research talked about, right? Remember in the last video I talked about how Lamb Research is estimating that wafer fabrication equipment spending for calendar year 2023 is going to be more than 20% lower than it was in 2022. And this is kind of what they're alluding to, right? Kind of what ASML is alluding to right here. That a lot of customers are revising their CapEx plans down for next year. The vast majority of our customers are still requesting shipment of their litho systems as soon as possible. Remember, lithography systems like EUV, DUV, what I talked about, what ASML sells. So the vast majority of customers are still requesting shipments of the litho systems as soon as possible. Our 2023 shipment demand is still significantly above our build and shipment capacity for next year. So, even though supply chains are getting better, demand is still outstripping supply, right? And they currently have their largest backlog ever of 38 billion euros. So again, even though supply chains are getting better, not that much, not enough. Almost 85% of this backlog is for EUV and immersion. Over the past quarter, we see the predictability of the move in rates in the supply chain improving. Of the move rates. Over the past quarter, we see the predictability of the move rates in the supply chain improving. So supply chain improving. We now foresee further improvement in our output capability in quarter 4. Supply chain improving. Plus net deferred revenue from fast shipments, right? Shipping faster, so deferred revenue is going to go down. Actual revenue is going to go up. You see an increase in shipment value over the year. Demand expected to remain significantly above supply. This is what they just said. Based on our discussions, We are in discussions with customers to share the extraordinary inflationary cost of. Oh yeah, something here made me laugh. You'll all get to it in a minute. We are in discussions with customers to share the extraordinary. Oh no. Okay, that was it. Sorry, I thought there was something they said after this. But yeah, when I read through this the first time, that made me laugh. To share, right? So they're in discussions with customers to share the extraordinary inflationary costs from freight, labor, as well as system components. So you can see ASML is very generous. They're sharing a lot of inflationary impacts. We expect to receive a reasonable level of inflation compensation over the course of next year. And considering that next year we will likely have less gross margin impact from fast shipments than in 2022, we expect gross margin to improve next year. Right. So they're going to receive inflation compensation from their customers. And again, just to clarify, their customers, they're not talking about individuals. They're talking about other semiconductor companies. So they're right. Remember, I said they're a semiconductor equipment manufacturer. So their customers are other semiconductor companies, and then we are the customers of these other semiconductor companies, obviously. So, and considering next year, we will likely have less gross margin impact from fast shipments than in 2022. Right. So we expect gross margin to improve next year. So it's kind of what I said. Our long-term gross margin ambition. So yeah, their gross margin over the past year, you can see what it is. Here's their actual results, right? So in the past year, it's been around 50%. Actually, first quarter of last year, it was 53.9%. But here they're saying their longer gross margin ambition is 54 to 56%. All right, and let's. Oops. Okay, and this is the last page, right? Okay, yeah. So I didn't want to take too much time here. With regards to the announcement earlier this month from the U.S. government around export control restrictions, and that's something that I also talked about in the Lamb Research video. So October 7th, the U.S. government announced export restrictions to China. I can actually let me pull it up. Just, in case you don't want to watch that video. So, wait, it's actually here. Right. So, October 7th, here it is. The United States government announced new export regulations for U.S. semiconductor technology sold in China, including wafer fabrication equipment and related parts and services. So, right, you saw in the Lamb Research video, Lamb Research is affected by this. And what we're going to read right here, ASML is actually not as affected by this. Here, let's see what they have to say. With regards to the announcement earlier this month from the U.S. government around export control restrictions, we expect the direct impact on ASML's overall shipment plan for 2023 to be limited. There could be an indirect impact, though, due to the inability of other equipment suppliers to ship their systems, right? So, that's kind of the thing that, we think about like an equipment supplier like Lam Research, and they might supply somebody like Taiwan Semiconductor, and then Taiwan Semiconductor, I don't really want to go through the whole supply chain here, but basically ASML is kind of like the base in the supply chain. Right, so they produce for even something like Lam Research, right? But they're saying that there are a lot of other companies that can't ship to Chinese suppliers, and so that is going to affect ASML because there might be less demand from these companies. But the overall impact to ASML is going to be very limited. Our current expectation of such an indirect impact would be around 5% of our backlog. So that's just of their backlog also, right? Right, and remember, as you saw, they have I think they said $38 billion backlog, or 38 billion euro backlog. Let's see what that is. Pretty, yeah, 38 billion euro backlog. So 5% of that. So I guess what they're saying is that in the future, they expect that their backlog won't be as bad just because of that. The new export control rules are directed at advanced nodes, while our business in China is predominantly directed at mature nodes. So there we go. Our customers' demand for our products continues to exceed supply. Okay, that's kind of the third time they said that, but yeah, something they're proud of, I guess. All right, and that's pretty much it. So a beat by ASML, and they're actually, so this was on October 19th. They finished that day at $424 per share. They're currently at $462 per share. So not only did they go up on this day, but they continued going up after that. So a beat mainly. I mean, they missed a bit on revenue, but like I said, the worst was priced in. And they only missed a bit on revenue, but they beat on their internal gross margin estimates and their analyst EPS estimates. And they also raised. They didn't raise by that much, but like I said, the worst, very bad results were priced in. So they beat on EPS, and then they raised next quarter guidance and full year guidance. Or I guess you can say they raised full year guidance, and then they beat next quarter analyst estimated guidance. So, and then they gave a pretty good earnings conference call too. Their earnings conference call was pretty good, pretty positive. So, yeah, pretty good all around for ASML and really semiconductor equipment companies in general, right? Like I talked about in the Lam research video. If you haven't watched that one, please go check that one out. Thank you for watching this video. I hope you learned something, and I'll see you around.